again, I could be wrong too. The more likely scenario is that Uber is going to aggregate demand amongst all of the various players that have different types of autonomous vehicles on the road. The consumer is going to want one-stop shopping, not, hey, this time I want a two-door. That time I want maybe a moped. This app I'll go to because I want this. I don't think it's going to play out that way, and I think Uber is going to be the central demand aggregator, and that's the bet that I'm willing to make. Now, the stock might be volatile, and Brad might look right in the short term as Elon consolidates power and convinces Trump to push for things that benefit FSD. I won't deny that. The thing is, I'm willing to sit through it because I think the bigger story here has yet to play out.
Yeah, real quickly, Josh, I love the way Josh framed that. I think it's brilliant framing. To be clear, we were the biggest defenders of this stock from $15 to $80. We sold the stock much higher than the stock is at today, right? And I reserve the right. I may be buying this stock tomorrow or in a month or in 2 months. I just thought that the optics were going to be really challenging as we move into the launch of robotaxi, which I think will occur next year. And this is not about regulatory capture. This is about the full self-driving capabilities, about FSD 13 at Tesla. Without that, there would be no investment going on in Tesla. People are excited about what they see with Optimus, what they see with full self-driving, what they see with the inexpensive cars they're putting on the road.
I do find it interesting, too. I mean, you have been trimming many, if not most, of your large tech positions. Meta is smaller today after Trump won the election. Microsoft is smaller, Google smaller, Amazon smaller, Apple smaller.
Right.
Why?
Well, we have two tectonic shifts going on in the world, Scott, right? Coming out of 2022, which was devastating for technology, right? 23 was reversion to the mean. 24 was, about the AI tailwinds. And who were the big beneficiaries? It was Mag 7. It was the safety trade. It's where all of us went and hung out because we had post-traumatic stress from what occurred in 2022. So as we got through the middle of this year, as the election approached, I said, people, if Trump wins, right, and we have lower taxes, less regulation, that's going to be a trifecta for this country, right? And so we need to get out of the safety trade and move into the things that haven't worked. So we moved, if we had 30% in Mag 5, now we have over 30% in software because we think those applications are going to be the next phase of the winners. So again, I just think that's good portfolio management. Mm-hmm. You can't go through the tectonic changes we've gone through over the course of the last 30 days and not be making portfolio adjustments.
Are any of these adjustments, again, I mean, I feel like some roads lead, if not all, back to Elon in the sense that, he was on the call with Satya Nadella and President-elect Trump. He's had beef with Zuckerberg. He was tweeting at Bezos. We can show the tweet. Just learned tonight at Mar-a-Lago that Jeff Bezos was telling everyone that Trump would lose for sure, so they should sell all their Tesla and SpaceX stock, to which Bezos responded 100% not true. Does all of big tech need to watch its back?
No, I mean, honestly, I think that the East Coast fascination that Elon is somehow mischievously hurting all big tech, I just think it's way off base. The reason, think about this. I was one of the, an outlier position for Altimeter, right? Like a 30% position from $90 a share to $550 a share in Meta. So nobody needs to tell me about the value and the outperformance and the incredible leadership by Mark Zuckerberg off of the bottom. But you also have to look at those moves and say, now that those asymmetries are known. People now know that NVIDIA is the leader in AI. They know that Mark Zuckerberg is benefiting greatly from AI. So the question is, what comes next, right? And when I look out at 2025, I think it's going to be very beneficial to a lot of software players. And so we just wanted to get more dollars at work there. So this isn't a question. In fact, we're buying Google today. It's down 7%.
On the DOJ calling for it to divest Chrome.
Right. And so, what have we seen over the course of the last 20 years? We've seen a lot of assaults on Google. I think that Sundar has gotten the message. I think the company is getting more efficient. I think that search is more resilient. And so we're actually buying it today. This requires you to be nimble and mentally flexible because a lot of things are changing. I think most of technology is going to benefit from this AI tailwind and the things that are occurring in Washington. But you have to be flexible in your portfolio.
Okay, so buying some Alphabet today on this news, and it's a big move lower, Josh, for a stock that you've liked for an awfully long time, down near 6% now.
Yeah. The last time we spoke about the stock, I had trimmed my position, and I'm genuinely concerned as a shareholder that they're going to go through this gap period between when the world figures out that the puck has now moved from showing people search results to handing people the answer, and how soon they can monetize that AI summary that they are now automatically putting at the top of search results. Also, even if they figure out the monetization of that AI summary, does that cannibalize some of the margin from search? It may take them a minute, and by a minute, I mean 2 quarters, 3 quarters, before A, they can convince themselves that they've solved for that, and B, they can prove to Wall Street that they're not going to lose as much market share as people are now starting to be concerned that they might. So I'm a shareholder in Alphabet. I'm a long-term believer that they will get it right. I just don't think anyone else is going to believe that. And that's why I had trimmed my position, which we talked about at the time. Nothing's changed. The antitrust stuff is going to be an albatross around this company's neck for a while. It's not clear to me that this couldn't go on for 3 years of appeals and blah, blah, blah. I don't know how much longer that's going to be priced into the stock, but it's a new wrinkle. There's no doubt about it.
Yeah, I mean, the other thing that we've been watching is not a stock, it's Bitcoin. Let's show it. I mean, because it's bumping up against $100,000, and it's getting awfully close. Whether it happens today, 97.5 is where it is now. Kate Rooney has some new reporting. She's with us now on how retail is certainly along for the ride.
Yes, guys, great to see you. You too, Brad. But so Bitcoin's part of the story, but there has been this resurgence of what some are calling the YOLO trade. You only live once. You can see it on social media. And then Wall Street Bets, remember that forum on Reddit? That's been heating up again. Bitcoin's rise is another way to track that sentiment. Vanda research this morning, though, points to action in MicroStrategy in particular. That is a proxy for Bitcoin. It's one of the most mentioned stocks on social media. It's up almost 700% just this year. As Vanda Research put it this morning, nothing screams FOMO chasing more than this stock. There's been a spike in equity purchases by Main Street investors in this name just since the election. And it's not just single stock buys. You've got out-of-the-money call options on MicroStrategy exploding recently. That is about the riskiest trade you can make on crypto right now. Generally, bullish option flows are on the rise as well, Scott.
Yeah. What do you think of this crypto move? Are you in it?
I'm in it at a personal level, right? I've been I added to it before the election. I added to it after the election. We don't own it in the fund, but I own it meaningfully personally. And, you know, if you think about it this way, Kate, yes, retail investors are getting into it, but we've had a decade where the federal government has literally launched assault after assault on crypto. And now we have a president who is going to be a very pro-crypto president. Think about how well crypto has done in the face of the regulatory assault coming from Gensler, the SEC, etc. And now we're talking about having a strategic Bitcoin reserve in places like the federal government in Texas.
Maybe even a White House position is being, bandied about.
And so for me, it's a store of value. It's a lot of fun. I open up my Coinbase account. I'm one of those retail investors. I don't mind getting a little action on the side in the day in Bitcoin. But also, I think it's a responsible way for us to balance our exposure in a world where you don't know exactly what rates and inflation are going to do.
Brian, you have Bitcoin too, right? The IBIT.
Yep, I sure do. I mean, I think talking about retail investors or investors, underneath the market, I think there's just I think YOLO is an understatement with these levered ETFs. I mean, yesterday, I think there was 50 billion in flows if you look between the levered ETFs and the other crypto. I mean, this is really big size, and I think there's creating some really, I think, volatile, somewhat dangerous moves in these levered ETFs because these things just don't end well. So yes, I think Bitcoin has been somewhat boring, up 100% relative to some of these other names, but I do think these confirmations that next year there's going to be regulation. Are we going to have Bitcoin take some of our gold reserve, buy Bitcoin for that? I mean, these things are going to continue to create a bid around these names, around Bitcoin specifically. But I would just continue to warn investors on these levered crypto ETFs. I just think it's a disaster waiting to happen.
Yeah, 97.6 is where we are. You can bet there's going to be more product coming to market as well to feed the beast, so
Yeah,
to speak.
a lot more options activity. You even see platforms like Robinhood sort of rolling out more of the advanced trading capabilities. I would also mention short interest. That's something to watch. Potential short squeezes. When you see this type of retail activity, can kind of get traders off sides. If you're shorting one of these stocks, it's something to watch. And then you mentioned the SEC. We had Vlad Tenev on this week. He talked about Dan Gallagher, their chief legal officer, is seen as potential heir apparent to Gary Gensler. He called him the crypto king. He's been very crypto friendly. So that would be an appointment to watch.
All right, appreciate you with the setup for us today, Kate. Thank you. That's Kate Rooney. All right, check out our chart of the day. It is Snowflake, and it is surging on its earnings. We said it's now your largest position. I mean, this is unbelievable today.
Yeah, I mean, Scott, as you know, we sat here at the start of 23, and I said I took down all of our software position. We rotated a lot into NVIDIA. We thought the age of AI was going to be about the age of semiconductors and building out the infrastructure, and that's largely been the case for the last 6 quarters. But as we headed into this election, so, starting, really late summer, we started thinking about what comes next, right, in the age of AI. And what comes next are applications and data platforms that all enterprises are going to have to put in place to benefit from the infrastructure that's been laid down, right? And so it was our only outlier position coming into the quarter, but it wasn't just Snowflake. Confluent is another big name we own in software. Salesforce is another name, we own in software. So we were rotating dollars into software and out of the Mag 5 infrastructure names that have done so well. But let's talk about Snowflake for a second, right? Over the last 2 quarters, it felt a lot to me like Meta in the fall of 22. The headline, Snowflake is dead. It's all over for Snowflake. The sentiment on this stock was a 0 out of 10, right? And what did I watch the company do in the face of withering criticism? Sridhar Ramaswamy, who we've had on this set, the CEO of that business, 7 days a week, grinding, delivering more products in this quarter, he said, than in the prior year combined. Right? The reason he became CEO of this business was to put in place the AI infrastructure to allow it to compete. And it's not just Snowflake doing well here. Databricks, where we're also a very large shareholder, is also doing incredibly well. Why? Because every enterprise on the planet needs to get ready to leverage AI, and you can't get ready to leverage AI if you don't have your data in good order. And these are the 2 largest data platforms in the world that allow you to get your data in order. And so it was an incredible quarter. They grew 29%, but importantly, they said 2 things. Number one, a third of their customers, 3,200 customers, are leveraging their AI applications already. And then number 2, it was really clear to me that as you look ahead, that this wasn't just a blip. This was the new normal in terms of the growth rate we should expect out of the business. And if you look at that against terrible sentiment, lots of hedge funds shorting the stock, and the stock, frankly, hasn't done well at all over the course of the last 6 quarters, it gives you a day that looks like today.
Like a coiled spring move. By the way, the CEO, Sridhar, is going to be on Overtime today, so make sure you watch that. With us right now is Stephanie Link. She owns the stock, and what's noteworthy about that is that she is buying more. Right, Steph?
Yes, I am. So great day today, but the stock is still down 16% year to date. I think sentiment is still very wary about the company. It trades at a discount to its peers at 9.5 times sales. The group's at about 11. And it's absolutely about the CEO. It's the 3rd quarter. The CEO is in the seat, and he's finally found his footing, if you will. So the most important 2 metrics, Brad mentioned, product revenues accelerated 29% from the low 20s, but operating margins were double expectations. So they're balancing growth and profitability and the margin story. And that, I'm a big fan of. So I think the message is optimization is ending and real dollars are going into product revenues on a sequential basis. And oh, by the way, really positive about this Anthropic deal because it definitely gives them credibility. Amazon has a $5 billion investment in Anthropic and Alphabet has a $2 billion. So they're in good company for sure.
What do you think?
Yeah, no, I think those things, I always look inside the company, like what's happening in the business? Is morale high? Are they hiring good people, right? What's happening in terms of sales? The new logos in the quarter were terrific. The net dollar retention, right? Companies that feel confident and are expanding. And then I talk to a lot of big companies in the quarter who are customers of theirs. I think after 2 years where everybody said, hold on, pause everything. We need to understand what's going on in the age of AI. We need to make sure this company is future-proof. They've now decided that it is. They're leaning back into their data spends. And again, this is benefiting everybody from Microsoft and Amazon to Databricks and Snowflake. But Snowflake is the market leader in that data platform. And it was up against really, really terrible sentiment. So that's why you got the spring coil effect.
Steph, thank you. We will see you on the desk soon, but thanks for updating us on this move. What's also notable, guys, is that the last time that we were out here at One Market was June 11th. And oh, by the way, Brad Gerstner had a lot to say about software at that moment, that the worst was probably over. Remember this?
I think we're probably getting close to the bottom in software. We expect it to inflect higher in terms of growth rates as we get toward the end of this year and into the beginning of next year. Remember, we're trading 20% below the 10-year average multiple for software, if you look as a multiple of either free cash flow or revenue. And so I think this is a good time to go hunting in software.
Well, Liz, software since then is up 28%. The IGV is. Semis, the SMH, down 5%. That says it all.
It does. And actually, if you look back over 2023 and 2024, I mean, software was up almost 50% in 2023, and it just paled in comparison to what happened in semis. This year, software is only up about 14%, which is good by broad market standards, but again, pales in comparison to semis. So I think that there's going to be a rotation that has probably already started taking hold, but will continue into next year. It's obvious that this market wants earnings, wants fundamentals to prove the moves in stock prices, and semis have seen that big move already. And when we break it down into what's been driving that move, you've got about 2/3 of it driven by earnings. And to be fair, semis have far outpaced earnings growth in software. But then the other 1/3 is just multiple expansion. And we know that that piece of it is fragile. So as we get into 2025, I think there's still a lot of uncertainty from a policy perspective and even from a rates and economic perspective. Software is a more defensive part of the tech sector. And as investors want to take gains in some of those big names that they've made a lot of money in, they're going to be looking for opportunities where they can still find commensurate growth, but not be taking as much valuation risk. And I think it's going to be a beneficiary of that trade.
We're watching Palo Alto. Speaking of software names that are on the move today after earnings, stock's up. It's $400. We keep an eye there. We're watching CrowdStrike today. 370 new price target from Cantor Fitzgerald. Bryn, you own the Bug Cyber ETF.
Yeah, so that means I own CrowdStrike, Palo, Fortinet. And so this like AI is a secular trend because we know cybersecurity, just the bad guys continue to get smarter, unfortunately. And so I think between AI and cybersecurities, these companies are just going to continue to grow on a secular versus a cyclical basis, like the semis outside of, let's say, Broadcom and NVIDIA. I think you want to stick with cyber, stick with AI, but be very judicious on the semi side.
Man, that was a heck of a call. I just I read out the numbers of performance since then, but you're always a now what?
Yeah,
Puck
listen,
is going places.
First, semis are down, and there are a lot of things that haven't done particularly well, Intel and AMD, et cetera. But we're also, NVIDIA's done quite well. We're also in Astera Labs, which has done quite well, which is providing networking to all these custom ASICs, et cetera. So I think you can still be in that trade. But yes, when sometimes it just is obvious, right? When there's blood in the streets, and if you believe in the AI trade, then you have to believe in software and data platforms. And we did, and there was blood in the streets, so you lean into that trade, right? When everybody already knows that something is great and there are trumpets in the air, like with NVIDIA, it doesn't mean that it's not a great business. It just means that there's less asymmetry from a portfolio management perspective. The great news for technology, Scott, is this. I look at massive tailwinds over the course of the next 5 years. I think they're going to be incredible winners. When I look outside of technology, really high valuations, and I see some headwinds for a lot of companies. So I think 2025 is going to be about picking winners and losers. Software clearly in the back half of this year was one of those winners, and I think we're just getting started. We're still trading under that 10-year average.
All right, coming up, we have two big moves from Josh Brown today. We'll get to those, plus Deirdre Bosa on what might be called a rift in Silicon Valley. That's what some are saying. We'll talk about the political fallout here in tech land following the election. We're back right after this. Welcome back to the Halftime Report. We do have some committee moves to get to. And Josh Brown, you are up because you bought Block, formerly Square. Tell me why.
Yeah, I can't believe I'm going back into Jack Dorsey land. The technical setup here is fantastic. My friend Steve Straza flagged a fairly large purchase from a former board member at PayPal. This was a purchase that actually ended up marking the bottom in the stock. And I think when you're forced to look at something that's breaking out technically, which if you look at like a 5-year chart, you see this massive consolidation. The stock is now breaking out technically. You want to look at the fundamentals and what might be happening here. Number one, this stock has gotten caught in the updraft of the crypto-related equities. Out of all the publicly traded companies, I think it's number 8 or 9 in terms of its own Bitcoin ownership. They have somewhere between 8,000 and 9,000 Bitcoins on the balance sheet. I can't nail down the exact number because Jack Dorsey has already committed as of May to take 10% of all their profits and plow them into Bitcoin. So we can assume they've spent the summer doing that. So the last count I saw is about 8,300 Bitcoin on the balance sheet. But this is an operating business. It's not MicroStrategy. This is a company that's got the Cash App as about half the business. The other half is Square, which is a massive payments network that includes the Afterpay, buy now, pay later service that they bought. Admittedly, they bought it at the top, but that's not our problem if we're entering the stock here. The technicals look really good. Stock has a lot of room to the upside, cleaned up a lot of sellers. They're in the right business. You look at some other payment stocks and how well they've done. Look at Fiserv. Look at Toast, which I also own, by the way, has broken out. Look at the credit card companies. Look at PayPal. This sector is red hot. Square really, Block really hasn't made the big move yet. So that's what I'm here for. I am playing it with a stop. It's not a high conviction long-term investment, probably closer to a trade, and we'll see what happens.
Yeah, we will. Well, it's up 3.5%. We'll follow that. Of note as well is Josh also trimmed Pfizer in half. It's on pace for its worst month since January of 23. But as we move on, I want to turn to what some are calling a rift out here in Silicon Valley, the growing political fallout in the Bay Area following the election. Deirdre Bosa is here with more on that. Very interesting story.
Yeah, so there was rifts before the election, and then the rifts have shifted a little bit afterwards. No surprise, different reactions from different camps and technology. From a lot of the conversations I had, if I had to broadly characterize it, you're seeing more optimism from little tech, while there's still a lot of uncertainty hanging over big tech. Box CEO Aaron Levy, one example, he was one of the most vocal voices here supporting the Harris campaign. When I spoke to him last week, he changed course, saying that having people like Elon Musk in the president-elect's orbit, that'll be positive influence on pro-growth and pro-innovation policies. I spoke to another founder, Jason Fried of Hay and Basecamp the other day, who said that there's excitement in the air, and he's happy to see growth-minded builders and makers of things, like Musk again, getting involved. Quote, "It's nice to see your own kind in there." Other founders and VCs that I've spoken to are skeptical of how long the Trump-Musk honeymoon will actually last. There can only be one main character type of thing. I was at a dinner the other night. We actually took bets on how long this would last, and I think the longest was midterms. Big tech, though, guys, an entirely different story. With one Trump administration under their belt, there's a bit of a playbook. They congratulated Trump early. They struck a more productive tone. What they may not have anticipated, the big tech, that is, CEOs, is exactly what's encouraging little tech, the Musk factor, that could lead to really unprecedented levels of conflict of interest impacting that, like having Musk on the phone when Senator Pichai calls to congratulate Trump. So kind of two sides. I'm super interested to hear what Brad has been seeing.
I want your point of view on this, too, because the first that I think we started thinking about this or hearing about this was when Reid Hoffman said that there was rancor disrupting Silicon Valley, a long-lasting rift, he said, that has interfered with business in the Valley. You know a lot of these players, if not all of them.
I mean, you know, my podcast partner, Bill Gurley, has said one of the magical things about Silicon Valley is it's 3,000 miles away from Washington, D.C. And the reality, innovation occurs here. What do we like? We like less regulation, lower taxes, and a balanced budget, right? So the excitement that comes out of this moment is that we have a lot of people in Washington who are committed to what I think is some of the biggest platform changes in Washington that we've seen in decades. Now, there may be people on the other side of that who are grumpy about the election. You know, Vinod and Reed were certainly big Biden supporters going into the election. From my take, I couldn't be more excited. You know, Josh cut his Pfizer position in half. I think that's the right thing to do for two reasons. Number one, I don't think you want to be on the wrong side of the Trump trade, and I think that those things are. And number two, I think the excitement is so big out here, you don't need Viagra anymore, you know, so you may as well get out of Pfizer.
But it seems like this election, more than any other that we can recall, has engaged the major players out here like no other.
Yeah.
You had, you know, big names out here either taking sides, hosting fundraisers. Is there a fallout for the capital flows, where they flow, how they flow? Are companies, you know, potentially going to get less funding from corners in which they would have before?
Yeah.
I mean, do we need to think about all that? You have a VC, you know, part of your business too.
Yeah, no, from my perspective, I don't see any of that blowback. I honestly don't. I don't see it from any of our LPs. I don't see it from our founders. And I think that again, we made a lot of headlines out of the rancor. I don't see the rancor. I see excitement. I see founders and builders building.
Well, some of your own out here made the headlines. We didn't make the headlines.
Well,
right?
I'm not blaming it on you, Scott, but I'm saying there is a fascination, right, with the competition, with the rancor. And I'm just saying I see a lot of unity around things that we can get done. Everybody in this country knows that a $2 trillion annual deficit is unsustainable. There is bipartisan excitement, not only here. I've talked to senators and House members on Capitol Hill. There's bipartisan excitement about the Department of Government Efficiency because everybody knows that Washington can work better. And so seeing some of our own, seeing entrepreneurs around the table lending a hand and making, you know, Washington more efficient is something we get excited
Maybe
about.
we'll see you pull a chair up to that table.
I'll do my part.
Gee, thank you. We got to run. Deirdre Bosa, thank you so much for that. All right, final trades are next. Closing bell today, 3 o'clock Eastern. Sarah Malik will be with me from Nuveen. Jeff Richards, Logic Monitor CEO, Christina Kosmowski, Joe Terranova, Adam Parker. I will see all of you then. I got to correct something, too. I misspoke earlier when I said that it was Satya Nadella who called President-elect Trump and Elon Musk was on the phone. It was Sundar Pichai, so my bad on that. I just want to make sure we're all correct there on that. Final trades. Let's do it. Liz?
This is a contrarian one, but healthcare, I know there's a political environment that's up against it, but I think a lot of it is already in the valuations. It's in oversold conditions. Short-termy, though.
Bryn?
Energy Transfer, I think pipelines will continue to do well next year, and it has a 7% distribution yield.
Josh Brown?
Fresh 52-week high for Baker Hughes. Raise the roof.
What do you got? You got a final trade?
Final trade, Zillow, one of our larger positions. I'm long Team America. I'm long housing. It's been underwhelming for years. I think this company is both getting more efficient and also is going to lead the way on the other side of housing.
It has been awesome spending this hour with you. We did it mid-year, and now we're about to close out 2024, so it's great to get a checkup on what's happening in tech, and we'll see you again soon.
Yeah.
That's Brad Gerstner of Altimeter. Got a nice market move, too. Dow's up 530. We'll track it over the final stretch. The exchanges now.